Welcome to the Fixed Income Outlook for the month of November by Aditya Birla Sun Life Mutual Fund. Global growth has been surprisingly resilient this year, but of late what we're seeing is that latest economic data which is coming out is showing some signs of weakness. The high frequency indicators like East Asian exports, trade data, the industry growth, and the survey data, all of them are showing signs of weakness. The China growth has been under pressure mainly due to the property sector and continues to remain so. European growth has showing signs of weakness and almost entering recession mainly because of high energy prices, Russia-Ukraine war, and the tight monetary conditions. Even the US economy, which has been very strong so far, has started showing signs of weakness. So overall, global growth, although it is at a respectable level, but it is showing some signs of weakness. The inflation momentum is declining across the globe, especially the core inflation is showing signs of consistent decline. That's a big positive. The commodity prices are also softening, especially the crude, which gives a lot of comfort. Job market, which has been very, very strong till now, is showing incremental signs of weakness. There's a better balance between the supply and demand of labor. That will give big comfort to the Fed. With both growth and inflation declining and policy rates remaining at multi-decade high, we believe monetary policy has achieved its objective of checking the excess demand. We believe policy rates have reached their peak, and while they'll remain here for some time, the next policy rate move would be on the cut side rather than on the hike side. Indian growth story remains resilient with both industry as well as services showing strength. Government capex remains strong, and the high frequency indicators like GST collection, power consumption, the credit growth, all of them are looking very strong and shows sustenance of growth. However, weakness in the global demand, the exports continue to remain weak. We think FY24 growth to be in 6.25 to 6.5 range. Inflation momentum has declined significantly in both September and October. More importantly, the core inflation has come down and has been coming down consistently in last few months. The last reading of 4.53% is a 3.5-year low, which is a big positive. With government focused on keeping a tab on food inflation, we expect inflation to remain moderate in coming months as well. The fiscal position of government is very, very healthy given the strong tax collections. We believe government will be able to meet its fiscal deficit target of 5.9%, even with some election-related spending going forward. Yields have gone up post the RBI's announcement of possibility of OMOs to maintain liquidity in check. We believe that liquidity is not going to be so surplus that there will be a requirement of a lot of OMOs. So given the yield at slightly higher levels right now and that the inflation is coming down and policy rates have almost peaked, it is a right time to allocate more money to the fixed income. If you're looking to invest your funds for a very short duration, let's say up to 1 month, you can allocate the money to liquid funds. For up to 3 months, the money can go to ultra short term or money market funds. 3 to 6 months, low duration fund is a good investment option. For 6 months to 12 months, floater fund can be looked at. For 1 year plus kind of investments, short-term funds right now give a very good opportunity to enter at elevated yields. For 2 year plus kind of money, dynamic bond fund can be looked at to play the cycle, or income fund, gilt fund, these funds can also be looked at. Right now, even US rates are at multi-decade highs, and there is an opportunity to play the US rates as well at this juncture, and for that we have launched 2 US Treasury ETF fund of fund. One of them is 1 to 3 year which invests in 1 to 3 year ETFs, and if someone has a investment horizon of 1 year plus, he can look at that particular fund. There is another US Treasury ETF fund of fund which is 3 to 10 year fund. If you have an investment horizon of 2 year plus, you can allocate some money there as well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।